We look toward regions of growth and instability. Joining us to discuss emerging markets, resilience, and risks in a fragmented world is His Excellency Dr. Amer Bisat, Lebanese Minister of Economy and Trade and former Global Head of Emerging Markets Fixed Income at BlackRock. We rarely see two renowned speakers moderating each other. Allow us to welcome again also here on stage Lord Jim O'Neill for a discussion about risks and opportunities shaping the economic outlook with His Excellency.
You quizzed me before you introduced me as to, what's my thing? What's your thing?
Yeah, no, it's very difficult, actually. I'm not the kind of person who likes sports at all. I guess what I am is somebody who, for his sins, decided to leave Wall Street and go back to public service, which is a huge punishment, so I'm going to come back to
So, not that this is necessarily an example, but I spent a very lengthy 17 months as a minister in the UK Treasury.
It feels more than years, no? Because in my case, what bothers me not most is not the politics, but it's the bureaucracy. Things just don't move. Is that the same thing with you when you were there, or?
One of the things that I took away, because this is a common view in the current UK post-Brexit, is that this is now a problem, and Brexit made it way worse, that nobody in the civil service can get anything done. But I'm not sure how true that is. But my experience is if you've got very clear objectives as the Prime Minister and your Minister of Finance is very close and they kind of share it, then that clarity quickly oozes down.
The whole cabinet, yeah.
So I want to come back to that in a more serious sense about the region. But let's start off by, what's your vision of the world? How do you see the world? Is it the same as so many people are kind of freaked out about all these supposedly never-ending things that shock us all, or never let a crisis go to waste?
My sense of the world that we're living in right now is that there's a surprising amount of global resilience that if I look forward, I see a more than 50% chance, 50% that Dr. Larian was saying. I think it's a more than 50% chance that we end up in a good place in 2026. I think there's enough driving. Now, am I going to rule out a negative outcome? No, I'll come back to that later on. But broadly speaking, we're in a fairly good moment in the global economy. We do seem to be going into a place where liquidity is becoming more ample, lower interest rates, and it seems to be happening in a non-inflationary way. So it does seem like we're living in a world in which liquidity is going to be fueling investments. We do seem to be in a world in which a weaker dollar, an orderly weakening of the dollar is a good thing. It improves the competitiveness of big parts of the world that are still linked to the dollar, and that to me is something that, from a macroeconomic point of view, is going to give some fuel to major parts of the economy, particularly in the Middle East. We'll come back to the Middle East later on, the Middle East, Africa, Asia. It's a world in which lower oil prices, I know there are winners and losers from lower energy prices, but broadly speaking, lower energy prices is a major boon to consumption, but also to investment as well. Trade, external trade, is proving to be significantly more resilient than we thought exactly a year and a half ago, when we started seeing the massive tariff trade, right? And there's a compositional shift in that trade boom that we're seeing right now that is benefiting emerging markets. Yeah. So the other side of the same story that we heard, that China is no longer exporting to the US, we talked about it, yeah. Mohammed talked about it. Who's getting that capacity? That capacity that is no longer being given by China is now being taken over by Mexico. It's being given over by India, by Vietnam. There's a huge number of winners. So not just trade resilience, it's also resilience that seems to be expressed by emerging markets as well. And finally, and maybe most importantly, this AI thing is a big deal. It's a big deal both, as we were talking before, just because the sheer amount of investment that seems sustainable as well. So if you're an emerging market, small, open economy, you're benefiting from lower oil prices, lower interest rates, weaker dollar, trade that seems to be helping you, and this huge amount of technological changes. that in theory should benefit you in terms of productivity.
It sounds like you're setting up Nouriel, who's going to follow us, as you know, this optimistic view about the AI-driven world.
Although the difference between me and Nouriel is that I've always had the positive DNA. But generally speaking, I think we're living in a good place.
I want to take you up on 3 things immediately come into my head about what you said a minute ago about a lower dollar. The first one is, let's start with a statement. It is quite remarkable how simple it is that when the dollar goes down, emerging markets generally, and again ignoring what I said earlier, we shouldn't be calling them all the same, but they typically do rather well. And everybody starts thinking of, oh my God, look at the change going on in that place, and da-da. And then when the dollar starts going up, the opposite happens. Is that really what's going on behind the emerging market love affair, mini love affair that's kind of started off last year, do you think? First question.
No, I think, listen, I think EM is proving to be more resilient than we had feared. I had feared 2 years ago. If you had told me 2 years ago that you're getting a world in which tariff wars, in which massive geopolitical uncertainties, significant amount of policy adjustments in the countries themselves where they had to tighten their belts after COVID, right? Remember there was massive amounts of spending in COVID at that time. I am surprised by how well economically and more recently from a market point of view, emerging markets have done, right? And I've been spending a lot of time thinking about that from my context in Lebanon. And there's 2 reasons if I were to think about them. One is they've been very lucky. A lot of the changes, including the weaker dollar, including the AI adjustment, including the supply chain shifts that are happening that are helping EM directly, like the Mexicos and the Bangladesh and the Saudi Arabias of the world, right? But there's another more important reason for why the resilience of EM. The policies in EM have become much better. Policies are like pure, here I'm going to go back to my traditional hat as a 1990s economist. The policies are good. Inflation is lower.
So Ali, let me just push you a bit. Yeah, so it sounds like you're making that as a statement about so-called emerging markets in general, or are there places within it where you think it's really evident there more than there? Or you mean in many places?
No, I'm actually you're 100% right. I'm making a broader statement about the complex as a whole. And I think if you go and you look across the spectrum of emerging markets, that idea that monetary policy is more credible, that fiscal policy is more serious, where debt is being sort of drawn down, and institutions are broadly stronger, you could probably make that argument in a broad sense, right? But that doesn't mean there aren't other factors for why I think there are winners and losers, right? So I am painting from a macro point of view, I'm painting a broader canvas of emerging market resilience. But there are so many other things where, and this I'd love to talk more about it, where there are new dynamics, trade, absorption of technology, the kind of industrial policy that some countries are following, the importance of where each country lives relative to the geopolitical tensions that exist, right? The ones who are more neutral tend to do better than the ones that are too linked. Yeah. There are winners. So the point I'm making is from a macro point of view, I think you can paint a broad brush, but then there are so many other dynamics where there are winners and there are losers. And I think the money, to go back to markets here, the money is going to be made on knowing who the winners are and who the losers are.
So, second of the 3 that came into my mind, which I guess a bit sensitive in a way, but let's assume a world where the dollar continues to decline, and the whole notion of, which always happens when, I think I might be quoted in the FT about this tomorrow, but whenever the dollar goes down, straight away it comes, oh, is this the end of the dollar and all the rest of it? And people confuse the cyclical decline. So, but let's assume the dollar is going to keep going down and it's more than just because the Fed's going to cut and this kind of stuff. What do you think in this regard, and please tell me, for those emerging market currencies that are pegged to the dollar, including so many in this region, do they just kind of like they have to think, you know what, we have to think of shifting to a basket and et cetera, et cetera. Do you have many thoughts about that kind of issue?
Yeah, no, absolutely. I mean, there are two elements to that question, which is, the first element I think is, will the dollar continue declining from here, and the extent to which it does? You're going to have to make, to answer your second question of what happens to the pegs, and this is not just in the Middle East, but in many other countries, you have to ask the first question, will it continue? It's going to be not linear. I come from a place which thinks that this is more of a cyclical movement. The dollar had become significantly overvalued over the past 25 years. And we just, to my mind right now, there's a rebalancing. Like there were macroeconomic imbalances that came from an exceptionally strong dollar, the reversal of which is now seeing the dollar weakening. It's hard for me to see another currency taking over from the dollar. It's very hard for me to see. The US still has an exclusivity, uniqueness, strength, whether it's growth differential, whether it's demographic factors, whether it's the attraction of capital flows. And on the other side, you're not seeing any other currency that has the macro and political and military capabilities to take over. So I see the dollar weakening, but not extremely, not breaking in the way that some people are fearing right now. I see it as more of a limited, I mean, if you look at the historical charts of the dollar, we're still in slightly overvalued territory. Could we go to slightly undervalued? We could. Could we move another 10%, 15%? I think that's very feasible. But this idea that the dollar is collapsing, I think, is an exaggerated fear. Which brings you to your second point, is should anybody use it as an excuse to get rid of the peg? Listen, the peg has, broadly speaking, served the regions quite well. And here I'm talking about the Middle East. The stability that has brought it, the confidence that has brought it, the absence of this exchange rate premium, the discipline that it has forced on its macro managers, I think it's served them extremely well. So I'll be surprised if, I mean, for the time being, they're benefiting from the weak dollar. It's improving competitiveness. The real exchange rate is actually depreciating. That's a good thing for any economy. In the meantime, so this is my personal view. I will never give advice to policymakers in the Gulf. They are a million times better than me. They are brilliant people, obviously, the way they've managed their economies. But feels to me that what they've done is right, so why break it?
I can't resist in saying, I don't have to do this anymore, but quite a lot of people in this audience used to ask me 30 years ago, what's going to happen to the dollar? Then I used to have to pretend I knew. Now it's like, it's going to go up or down, unless it goes down or up. And it, yada, yada. Anyhow, the third more substantive one, linked to your, both the theme of more EM places are more structurally resilient, I think is what you're essentially saying. Secondly, something you asked me earlier about the BRICS Plus. And then I want to bring in part of that, actually something you touched on that I'm going to test you about more. And this sort of notion, is there the beginning of some vague things about at one point in the future where the dollar will be replaced? So first part of it is, what do you think about, given your breadth of experience of the emerging world, who should really consider being part of this BRICS Plus crowd? And if there is anybody, if there's Mr. or Mrs. BRICS Plus, how should they go about really asking those people?
Another way of asking the same question is, who's the winner in emerging markets in this new world, right? It seems to me that there are a number of criteria that we're looking at. One is, I think scale matters. Larger is better than smaller. Smaller, it's difficult to have your own autonomy. Larger, you can build on a cushion of domestic resilience, domestic market. You have more autonomy. So think India. Right? Think. There's a reason why Indonesia, as you were saying this morning, right? Two, countries that can navigate geopolitical polarities. So neutrality matters a lot in today's world, where you don't need to choose winners, right? Choosing winners makes you vulnerable. If you are large enough, powerful enough, strong enough, and able to navigate those polarities, you tend to be a winner as well. Think Saudi Arabia. Right, it's navigating it extremely well as well. I think Mexico, Brazil, another place, certainly India. I think this is the second part. So first is size, second is the geopolitical neutrality. Three, not needing capital, not being a hostage to capital markets, right? Having excess savings, being able to be rich enough to invest in yourself without needing to necessarily, you don't want the rest of the world to push you into making decisions, right? So capital surplus countries that have strong balance sheets tend to do better. Think Saudi Arabia, think the Gulf as well. Countries that have capability of catching up technologically, right? And this, unfortunately, it may not apply to the Africas of the world, but could apply to Southern Europe, applies to East Europe, applies to Northern Asia. Countries that can adopt technological advancements fast enough and increase their potential growth. So I look at, again, so it depends on which of those vectors you look, but the countries that we've been talking about are all countries that I tend to be positive on. The Indonesia, the Mexico, certainly India, Vietnam, Bangladesh.
The next 11 largest.
Exactly.
Yeah.
In our region, obviously the Gulf. I think the Gulf fits on all of these factors, and as a result, it's not a coincidence that the region is doing as well as it is. Chances are it will continue. The huge question to me is the large Arab countries, right? And
Egypt.
Egypt, number one. Right? The story is, now I'm becoming more...
Egypt is part of the BRICS Plus already, of course.
They fit in so many of the other criteria. They're large, they have their own politics, they have the history, they play geopolitics quite intelligently, they're reforming, you see the reforms. The problem is saving, like they are continuously and consistently in need of international capital. They can never grow fast enough without a very large current account deficit. Egypt is a big question. I'm becoming increasingly optimistic, much more bullish on them. It's the big question in my mind. Morocco, I'm very optimistic about Morocco. I think they are making the transition quite well, piping into the new supply chain.
I read something a couple of months ago that like become a massive car producer in Morocco. Yeah?
Massive, sorry?
Automobiles.
Absolutely, absolutely. They're piping into a European supply chain and replacing China as the exporter. They are the Mexico of Europe in many ways. Obviously, the big question, and this is really speculative, but what happens in Syria? What happens in Iraq? What happens in Lebanon? This is more of a... But in the region, I look at the Gulf. The Gulf, I think, is definite winner. And to me, the two big ones that seem to have crossed are Morocco and Egypt. And I'm still hoping someday that the Mashriq, the Syria, Iraq, Lebanon would follow.
So the third part of this question, I'm going to go back to this global monetary system, currency dominance. And I was going to ask it anyhow, but in some of the interviews I did over lunch, it's added to my enthusiasm to get your response. One of them pointed out that because I've got BRICS stamped to my forehead, that I always get asked about, BRICS currency. And then, until a year ago, I would literally laugh when somebody would ask me that. But I've found myself thinking over the past few months, in specific circumstances, maybe it's not insane. So I don't know if you've seen it, but the Russians actually, in the BRICS meeting the year before last, came up with this idea, and I wonder whether it might have some relevance for what some of these countries are doing in the gold market, of what, if I remember rightly, it would be a basket, and this is just for trade, which is the bit that made me start to think differently. 40% gold, and the rest would be some kind of weighted average of the BRIC countries. So obviously the RMB being the most important. And I'm intrigued for two reasons. One is because I think some of the big BRICS countries actually explore it a bit, especially with modern technology. And as an aside, it often seems to me that when Scott Bessent, US Treasury Secretary, particularly sort of has this view with stable coins that it adds to the persistent strength of the role of the dollar. This is another sub-question. Is that really true? Because surely that technology makes it easier for anybody else that really wants to do that, particularly if you're big. And there's quite a lot of evidence that China is doing that in China. So I'm interested in your thoughts on that. And the bit that sort of, and again, it sort of goes to, I'll call it the Mark Carney related stuff, that you know, somebody that's been immersed in international monetary things for 40 years, my own conventional thinking is you can't replace the major currency unless you completely liberalize your capital markets and all the rest of it. But maybe that is very old school.
I mean, obviously, it's a very intriguing idea, whether we can create an emerging market currency, a BRIC currency, which at least it's a very intriguing idea. But the history of currency unions, and I know you know this literature quite well, is difficult for me to see it, given that the massive difference in economic structures, huge amounts of economic imbalances within these regions.
Yeah.
As well, you have a lot of deficit countries, a lot of surplus countries. You have an institutional backdrop, like you require payment systems. Even if capital account convertibility is not completely necessary, it has to be part of the story. So it's an intriguing idea. I'm not convinced we're there yet. I just don't see anything except the dollar playing that role today.
So I'm going to push you one last time on this, because when I hear you answer it like that, you know, one could think of actually that's what the euro is. The euro isn't a challenge to the dollar because the Germans don't want it to be. They don't want a fully blown euro-denominated bond market in the same way they never really wanted people to fool around with the Deutschmark. But obviously, in the euro area, it's a pretty important thing to reduce the costs of trade between all those countries. So.
I mean, it certainly helped, but it's never been able to break through. Besides being a currency union inside the continent, it's never become never become a currency that can be used for international trade. Again, it's an intriguing idea. It's certainly worth pursuing. But I wouldn't want personally to spend. I'm happy with the idea that the dollar is the main currency of the world. I mean, let's be stuck with it and focus on our domestic policies.
Okay, I was going to ask one more. Who has a burning question in the audience? Our host. Our brilliant host.
I put the question to you, Egypt or Turkey?
The question is Egypt or Turkey?
First of all, and I apologize for not doing this at the beginning because I really want to thank you and the family office for inviting us. What an amazing conference and what a superb location. Thank you so much again. No, today I'm categorically Egypt. Today,
wow.
Today it's categorically Egypt. Turkey, I don't think Turkey is close to a crisis. I think they are right in that middle point where their balances are financeable, but they're not in a good place. They're not in a bad place, but not a good place, and they seem to be stuck. And they're not able to move forward either in terms of reform. Growth is suffering. Inflation is still an issue. The politics is a constraint for them. Egypt, I think, is turning the corner. Does it still have risks? It has a lot of risks. Any country that needs dollars as much as Egypt needs, right? The balance of payments is always looking for dollars. They seem to be able to get it right now. There's enough investments coming in, growth is happening, they're pushing on reforms. I would like them to structurally get to the point where they don't need to continuously borrow. If they get to that place, I think they fly. But for now, despite this problem, they seem to be reforming, growing. They're much more stable. They're facing now a good push from remittances, from tourism. So no, today Egypt is much more interesting to me than Turkey.
Okay, so the last question. I, unfortunately, didn't ever visit Beirut in the 60s because I was too young, when Beirut was the Paris of the Middle East, so apparently. When's Beirut going to be the Paris of the Middle East again?
Tomorrow at 2 p.m.? I'd love to. Listen, I think Lebanon is turning the corner. I'm realistic. We have massive challenges. Nobody is saying that the country is out of the crisis. We still have massive amounts of problems that are quite serious. But unlike the last 6-7 years, I think we've turned the corner. I think we know what needs to be done. We're dealing with our banking sector. We're dealing with the major sectoral problems that we have. We're dealing with rebuilding the state. And this audience knows Lebanon and knows Lebanon's potential. Right. Lebanon is coming back to be the hospital of the region, the university of the region, the architect of the region, the musician of the region, right? The tourist destination of the region. Nobody can replace it. And I think we're on our way. Still a long way to go, but I think we're back on that long way. We'd love to have everybody, including you, come and visit us.
Fantastic. Thank you so much.
Thank you so much. Thank you.
Brilliant.